Good morning and welcome to TOITOI Japan Market Radio for Sunday, March 1, 2026. I'm your host coming to you from Tokyo with the latest market movements and news that matter for global investors tracking Japan exposure. Joining me today is our portfolio manager focused on Japanese equities and macro. Let's start with the market summary, though I understand today was a bit unusual.
That's right, thanks for having me. The Japanese market was actually closed today for a public holiday, so we don't have trading data for the Nikkei 225, TOPIX, or movements in JGB yields from domestic activity. That said, offshore markets and developments over the weekend have significant implications for when Tokyo reopens, particularly around energy security and some notable portfolio flows we need to discuss.
Understood. So even without domestic trading, there's quite a bit to unpack for investors. Let's dive into the major headlines. First up, we're seeing significant disruption in global oil markets. Oil tankers are reportedly avoiding the Strait of Hormuz following U.S. military strikes against Iran. This is a critical choke point for global energy flows. Can you walk us through what this means specifically for Japan?
Absolutely, this is a major concern for Japan. The Strait of Hormuz is the transit route for roughly 20 to 30% of global seaborne oil, and Japan depends heavily on Middle Eastern crude. Somewhere in the range of 80 to 90% of Japan's oil imports come from the Persian Gulf region. When tanker operators start rerouting to avoid geopolitical risk, it immediately raises questions about supply security and cost. For an energy import-dependent economy like Japan, any sustained disruption threatens both the cost structure for manufacturers and broader economic stability.
So this isn't just an oil price story, it's really about Japan's structural vulnerability. How should investors be thinking about the market impact when Tokyo reopens?
Exactly. On the equity side, we're likely to see near-term headwinds for the Nikkei and TOPIX. Energy-intensive sectors like chemicals, steel, and transportation face immediate margin pressure if oil prices spike. However, there's a bit of a cross-current here. Exporters could see some relief if risk-off sentiment weakens the yen, which would help their overseas earnings. Energy names like INPEX might see volatility as traders try to price in both higher oil prices and supply uncertainty. Overall, though, the risk-off tone is likely to dominate in the near term.
And what about the yen itself? We often see safe haven flows into the Japanese yen during geopolitical flare-ups.
That's the initial instinct, and I'd expect some safe haven demand to support the yen in the very near term, so we could see USD, JPY move lower. But the medium-term picture is more complicated. If oil prices remain elevated and Japan faces sustained energy inflation, that could actually weaken the yen over time, especially if the Bank of Japan remains accommodative and real rates compress further. It's a tug-of-war between safe haven flows and the structural drag of higher import costs.
Staying with the geopolitical theme, there's additional reporting on the broader stakes for oil markets as the U.S. administration under Trump takes a harder line on Tehran. This seems to be escalating rather than de-escalating. What are the key variables you're watching here?
The critical factors are the trajectory of oil prices, specifically WTI and Brent, and any concrete estimates of supply disruption volumes. If we see sustained disruption to Hormuz transit, Japan will be forced into rapid shifts in procurement strategy, possibly sourcing more from non-Middle Eastern suppliers at a premium. That has direct implications for the trade balance and inflation expectations. For Japanese government bonds, we'd likely see yields decline in the near term as risk-off drives a flight to quality. However, if inflation expectations rise sharply due to sustained energy price elevation, there could be upward pressure on the long end of the curve, particularly if the BOJ signals any shift in its patient stance.
So it's a stagflationary risk scenario in the worst case.
Precisely. Growth concerns from higher input costs combined with inflation pressure, not an easy environment for policymakers or equity investors.
Shifting now to corporate news, we're also seeing some notable portfolio adjustments by global institutions. Citigroup has reduced its holdings in Mitsubishi UFJ Financial Group, Japan's largest bank by market cap. This caught some attention given MUFG's importance in the Japanese financial system. How significant is this move?
It's noteworthy, though we need to be careful not to overinterpret without knowing the exact size and timing of the reduction. MUFG is a systemically important financial institution and carries a weight of roughly 3 to 4% in both the Nikkei 225 and TOPIX. When a major global bank like Citigroup, itself a systemically important institution, cuts its position, it can signal a reassessment of MUFG's relative value or strategic outlook. That said, it could also just reflect routine portfolio rebalancing or risk management.
But from a market impact perspective, what should investors be watching?
The immediate impact on equities would likely be modest but negative, depending on the volume and execution timing. If this is part of a broader shift in sentiment toward Japanese financials, that's more concerning. Japanese bank stocks have been sensitive to yield curve dynamics and BOJ policy expectations, so any perception that global investors are losing conviction in the sector could weigh on the broader index. On the yen, the direct impact is limited, though sustained selling pressure on Japanese financials could marginally weaken risk sentiment toward JPY. JGB yields would see minimal direct effect, but if equity weakness broadens, we might see marginal support for JGBs as a domestic safe haven.
So the key question is whether this is isolated or the start of a trend.
Exactly. If we see other global institutions following suit or if MUFG's share price underperforms peers, that would be a signal worth taking seriously. For now, it's a data point to monitor rather than a flashing red light.
Understood. Let's tie this all together for our global investor audience. We've got geopolitical risk affecting energy security, potential safe haven flows into the yen, and some rotation out of Japanese financials by at least one major global player. What's the overarching theme here as Tokyo prepares to reopen?
The theme is heightened uncertainty with cross currents. On one hand, risk-off sentiment from Middle East tensions should support JGBs and the yen in the very near term. On the other hand, Japan's structural energy vulnerability means any sustained oil shock is a negative for growth and corporate margins, particularly in cyclical sectors. The financial sector move by Citigroup adds another layer. If it signals shifting sentiment, that could weigh on index performance. For global investors with Japan exposure, the key is to watch how these dynamics evolve over the next few sessions: oil prices, yen direction, and whether financials stabilize or continue to see outflows.
And from a positioning standpoint, what's your advice, or rather, what should investors be thinking about?
Well, we don't give specific buy or sell recommendations, but I'd say investors should be prepared for volatility. If you're long Japanese equities, particularly in energy-intensive or financial sectors, this is a period to reassess risk exposure. On the currency side, short-term yen strength is possible, but medium-term direction depends heavily on how the BOJ responds to any inflation uptick from energy prices. And for JGB holders, near-term support is likely, but keep an eye on inflation data and any BOJ commentary.
Great summary. Before we wrap, any final thoughts for our audience tracking Japan markets?
Just that the holiday today means Tuesday's open in Tokyo will be critical. We'll see how offshore pricing and sentiment have shifted over the weekend, and whether the market quickly reprices for these geopolitical and corporate developments. It's going to be an important session to watch.
Absolutely. Thank you for breaking all of that down. If you're a global investor following Japan's markets, make sure to subscribe to TOITOI Japan Market Radio for daily updates and analysis. We'll be back tomorrow with live market data and further developments. Thanks for listening.
Thank you.